Hello, accounts people. Time to go back to our Osborne paper. Remember, I'm using this one as a walkthrough because I don't like the idea of students watching somebody do a walkthrough of the sacrosanct AAT ones before they have a go at it. Watch those recordings on all AAT practice papers once you've had a go at it first, and you'll learn 10 times as much. So we've got to task 7 on our business tax. So according to examiners, occasional issues on this one, but it's quite a well done task. Remember, this is the paper where most tasks are fairly even. Only the one written one's a little bit lower than the others. So fairly consistent. And this task is about filing dates and payment and administration, sole traders and limited companies in the question. This one starts off with a sole trader. It doesn't actually say she's a sole trader. It's just got her name though, that's a clue. But also the biggest clue is the fact that there's class 4 and national insurance is being paid. So we haven't got any problem working out that she's a sole trader. So we've got 3 previous years tax amounts, and we've just got to work out exactly how much is due in the calendar year 2025. Exam nerves, obviously. Most of the way through the paper, you could be getting a little bit jittery. Make sure calendar year 2025, not the financial year 24-25. So there will be 3 payments, 2 payments on account, and a balance in any calendar year. We're just going to get the dates right. They've actually given us more information than we need, but we'll have a look. So what I've actually done, and this works quite well in class, particularly when I'm teaching it, although it's a little bit of an overkill once you're really competent at this task, is some visual workings out. So the rules are going to the reference material. Reference material. Let's go back to the reference material. That's the national insurance amounts. That's section 2. However, the admin is further down. There we are. Sole traders, filing deadlines. That's the bits we want. We've got 1 column. I'm not sure what happened there. Sole traders and partners, the other for companies. So we're going to get the dates right. 31st of October following the end of the tax year is the filing deadline. And then the payment, same date. 2 payment on accounts beforehand, though. So that's for somebody who's been trading for many years. That's why it says that in the question. Wouldn't apply payment on accounts if you were just starting up. You can't just suddenly start sole trader today and make some payment on accounts based on last year's results because you haven't got any. 31st of January during the tax year, and then the 31st just after the end of the tax year, with the balancing payment on the same day as filing. Let's get on with this then. So 21st, this is the easy one to do. I'm going to get a little bit over the top, but because that's just after the end of the financial year. The tax year, April the 5th, 6th, 2022, or because most people just work to the 31st of March, and that's fine. And then we know the balancing will be the self-assessment date, same date, the next calendar year. And if she would already have made a payment towards this year, easy these dates. So there's nothing to do with 21 because it's all January 22 and January 23. So once we've done that, we can literally just update these. Important marks. And already we've actually just hit our first date that we're interested in, because that one is the current calendar year, 2025. Go back and retype that one. 7, we're doing the second balancing. do this on my laptop computer. It's not working very well. Sound. And that will be interesting because that's 25. That's 24. And that one will be interesting because that's, so the balancing payment in the question will be from 23-24. This one will cause problems. Occasionally students will misread. It's the current tax year, but it's not the answer to the question because the question's about the calendar year. So now what we've got to do is work out the amounts. So in the question, we've got the amounts in the question. 2021 was 12,100. Of which some would have been, so for this financial year, some of it would already have been paid, but we don't know how much would have been paid because we need to know the previous year's tax bill. So we're just going to leave that one as a blank. So the two payment accounts, and therefore we don't know the balancing payment. So although we've actually got that number in the question, we've got the 12,100 for 21-22 in the question. We can't actually do anything in terms of the workings out, but what we can do with it is the balancing, the payment on account, the first and second payment on account for the next year. Computer's asking me a question. And it's still working. This will be the same. Now, we don't actually need this number at all. However, no harm in practicing calculating it. We've paid 12,100 towards 22-23. Maybe it's there just to cause a bit of confusion. Towards 22-23's 13,950, which I reckon's another 1850 due. We can just double check that one. It will add up. Spreadsheet, why not? 13,950. That's where that was paid. But that's not our green boxes. That's actually the data we need. Maybe it's here just to try and catch you out. So our payment on accounts will then, for the next year, be half of the 13,950. $6,975. And now we're going to be interested because this figure is going to come up. Okay, probably get it in head a little bit. It's an extra 350 because we will have paid 13,950 twice, two payment on accounts, but the difference is the 350. That adds back up to that number, and that is one of the ones we want. So during the calendar year, we're going to be paying two payment on accounts towards the current year. And these are going to be half of the previous year's tax bill. Those we're interested in, they're the numbers we wanted. We don't actually know the balancing amount because we haven't come to the end of the financial year. We haven't worked it out and submitted the self-assessment return. So a nice visual way of working out the answers. Notice the extra information. Notice the patterns. We've got a balancing payment and a payment on account on the same date. And two items of the same amount. Just to sort of play mind games with you. But we'll put these in now. So for the right year. So this was 23.4. We'll do the balancing first. And then let's go back to our working. So it's this one, 31st of January 23. the balancing. Hang on, let's get this right. That 350 is 23.24 on 25. It's 23.24, 31. 5, that's what we wanted. That was our balancing payment. And that was our 350. So the others were the 7150. 7150. These were the two payment on accounts that we just worked out. And they were for the year, the current year. Well, it's going to be done. So we've got two of the same year there. 24, 25, and then we've got two different dates here. So the first payment on account, the one due in the year, 25. It would be because we wouldn't be interested in it in the question if it wasn't. And then we've got that date. No harm sketching things out on bits of paper, trying to work these ones out, and the pattern sometimes causes the problems. And then we can also do a quick workout on this one, a little bit of graphics sometimes, as I would have done whilst teaching it in class. And it certainly has helped a lot of students recently, including yesterday, getting in a little bit of a mess on dates and trying to work out the rules. But the rule we're interested in, this is a small company. Annual profits less than 1.5 million. It doesn't actually say that in the question, but I happen to know that. Wording missed out the question, I think. 9 months and 1 day after the end of the accounting period. So fingers time, or I can do it nice and easy on here. Maybe make it a bit bigger. So that's 1 month. 2, 3, 4, 5, 6. Whoops. So the first day in August. Yeah, we can now fill that one in. It's 5. 9 months and 1 day. Information in the reference material. That timeline, of course, comes in useful on lots of other questions as well, so it's worth. So now we've got some tick box questions. We may be going to the reference materials, maybe not. Little tick boxes on these. Just checking what it's looking like on the screen. Right, so interest. Okay, you can try and work these ones out logically, or not logically, either way. Interest is payable by self-employed individuals on late balancing payments, but not on late payments of account. Is there anything like that in the reference material? I'm opening up my reference material, just checking whether it's not showing on screen. What did it say about payments? Fines, let's have a look. Nothing here. Piling deadlines, payments. Interest charged daily on late payment. Nothing to do with balancing or payment on account. Payment on account is due. Back to our answers, then we know what the answer to that one's going to be. Switch back over to it. And we can put the appropriate tick. So it doesn't matter if it's payment on account or whatever, it is false. £100 late submission penalty payable for self-employed individuals, even a date, few dates. Again, we could really do with flipping back to the reference materials. But if you have a look, not just for the one question, it's going to take time. Under penalties for late filing, it says £100 immediate penalty. Doesn't matter whether it's an hour late or 6 months late, that £100 late submission penalty will be given out unless you've got an incredibly good excuse, which is the next question. They're saying any excuses, well, yes, they've had to. They would like to automatically fine everybody and not accept any excuses. But if you were in a hospital in Australia for a year or two, I think you can get away with that one when you come back. Not sure about any other excuses. I wouldn't try push it too much though in the real world. So taxpayer, reasonable care, still an error, always a penalty. I'm not sure about this question, actually. I think it probably should say didn't take reasonable care, it was careless. However, again, it's interpreting the rules. So the bit we now need, and we'll use this for the other questions, next couple of questions as well, is the penalties for incorrect returns. So I'm going to back to the right window. And it's this bit. And the reason why the answer is this unprompted minimum 0%. So even if they thought it was careless and you told them, and if you came up with an appropriate excuse, it could of course be somebody else's fault or whatever, late bills or something like that, or late invoices, or all sorts of things can happen. Therefore, they do have as long as they don't have to tell you, they don't have to prompt you, you might get away with a 0%. Let's go back to answer sheet then and put that one in. So answer is not always a penalty. So forget the reduced amount. That's going to come up in another question. Changes to corrected error can be made as, yeah, okay, that's fine. Now, a lot of students don't know this. A lot of people miss this one. It's under the filing bit. We'll go back to it in a minute and I'll point this one out. So it does in class, or some of our students hadn't missed it. They missed it in the information somehow or other. So a taxpayer discovers an error in their tax return. Additional tax interest may pay depending on when the additional back. Yeah, it doesn't matter. It's a bit like the filing penalty. From whenever it was due, there's going to be interest. So I see. Hang on, I got this one wrong. What I was saying was right. What I did was wrong. So taxpayer took reasonable care, there will always be a penalty, and that's the 0%. So let's just flip back and just double check those last three, where the information is. So that's the 0% bit that answers the one question. And the other bits that matter to that, let's have a look. So the charge daily on late payment. Don't matter whether the late payment was caused by a mistake or not, it's still going to be charged. And then that's the bit. Amendments can be made within 12 months of the filing deadline. All right, so we've done that a little bit. Getting back quickly back to answers we're doing, so we're quite happy with those. Couple more on this one. And again, we probably could have done with flipping at the answers of it. Yeah. So possibly what I'll do is put the answers in and I'll show you where the information comes from. So this is about a prompted disclosure of an error considered due to lack of reasonable care. So that will be the careless, the top row in our table that we did see a couple of minutes ago. The additional corporation was 15 and penalty be as follows. Okay, well, this one will be 15%. And this one is 30% maximum. It's going to be twice the other one. So, okay, let's just quickly double check. It's always good to double check, even if you think you know an answer. Just like the indirect tax. Always a good idea to check your answers. So that's our reference material. We're not far off. Back to the table. At the bottom, penalties for incorrect returns. So careless errors, that's where the prompted and the maximum come into it. So prompted means they tell you, and then it doesn't matter what it is, that whether it's unprompted or prompted, there's a maximum of 30%. Right, let's get on with task 8. Not task 8, because task 8 is a written one. I'll put that in a different video. What I'll do is jump past the 2 written ones onto task 10. I didn't actually put the numbers in there, did I? I just put the percentages in. So we'll finish better do that one. $525 and 1050, which is double 30%. So 8 is actually slightly the worst meta task. Do a separate video on 8 and 9 on the written one, and then how you build up your answers. And then task 10 on business disposals. So business disposals, apart from the £1 million business asset disposal relief figure, there is nothing else in the reference material. So we won't be toing and froing, unlike task 7. We are going to be answering this from knowledge. So you've got to know what happens and understand the why on the disposals. So usually an okay task. Obviously, getting 100% on it seems to be a problem now for some reason. So read carefully. Sole trader many years. He's selling his business as a going concern. Overall proceeds 1,550,000. It doesn't actually show you in the question, but that's where the 1,550,000 comes from. Some of it's goodwill, buildings, plant and machinery, van, and net current assets. So we've got some goodwill that has been acquired by Rashid in 2005 when he bought the intangible assets of another business for £50,000. Well, that solves our problem. Now, this question is about capital gain pounds and how much of it's going to be charged at 10 and 20. We're not calculating the capital gains tax he's going to pay. That's in the personal tax exam. But the capital gain from a business point of view on the goodwill is going to be the 450,000 minus the 50,000. Doesn't matter whether if it's been written down in his accounts, it will have been written down in his accounts over several years ago, because you normally write it down as about 20%. So in his accounts, it's showing as nothing, but this is the capital gain on it, not the not compared to the written down amount. And the buildings, no extensions or anything. Obviously, anything like that might matter. There's a question around where one of the practice papers where there's an extension done straight away, so it counts. 280,000 sold or valued at 550,000, so equals 550. $270,000. So the plant and machinery, now the key factor here is its zero tax written down value. But that's not a capital item. It's been fully capitalized. The capital allowances have been fully claimed. What will actually have to happen based on the value of the machinery, there's going to be a balancing charge, but the balancing charge is not a capital gain. The balancing is in the trading accounts. Obviously, on a different task, on a different question, you might get asked more about that. But that is a nice big zero, nice easy to add. Because it belongs, it's a balancing charge in statement of profit and loss, the final ones. And exactly the same with the van and the net current assets, because they're trading items, they've been bought to be sold. Net current assets, in other words, the stock mainly of the business. So total gains, we can add these two up. On this question, it has got the AAA, don't rely on it. So that actually is in the reference material. That's in the capital gains at the top. Obviously, it's more of a subject in the personal tax exam. Any individual, of course, he's a sole trader, so he's an individual, is allowed to make £3,000 of capital gains in any year before paying tax. So this little bit, we need to know about the business asset disposal relief. So you may get this as a percentage rather than a pound sign. You're allowed £1 million lifetime. So as he's already claimed £950,000 or the equivalent of it in percentage terms on a slightly different version of it, he can only claim the last 50,000. So make sure you answer the right question. It's not 50,000 at 10%. It's the gain. And the rest of it, the 670,000 minus the 3,000. I've done a typo there. What have I missed off? 6, missed the 0 off there. Hang on, try again. Equals 670,000 minus 3,000 minus 50. Playing the calculator. 617,000, and that's our answer for task 10. So we've got only 3 potential tick box answers here, which are true. So it's not true and false, it's just tick the 1 or 2 or 3 that are true. A little bit of knowledge. Again, nothing to help you at all on these 3 in the reference material. So what's going to happen? The disposal balancing allowance in the main pool, no, because it's a balancing charge. It would be a balancing allowance if the capital allowance hadn't been claimed. However, that's then set off, of course, against the proceeds. Impacts of the disposal will result in it, yes, the proceeds from van P and the current assets. Further claims, no. He can't make any more. He's now used his million. And there we are. That will do for now.